Greetings to all you freedom lovers, all you financial freedom lovers, all you political freedom lovers, all you medical freedom lovers, and yes, all you spiritual freedom lovers. Hello to all of you. This is a special time to be alive. This is a place where we come together and talk about the gold market and how it relates to the higher order of human development. The crest of the wave of human evolution is happening now. What we do here will determine our path going forward as a species. So let us make wise choices to align with freedom, to align with prosperity, to align with love, and to align with growth, and to throw off the chains of those who would dare to limit us. Welcome. This is Christopher Aaron. It is February 11th, 2022, and we have a lot to talk about. Not only are we due for a gold price update, but we must talk about what is happening in the world right now with respect to this possible war in Russia and the Ukraine and how this may impact the precious metals markets going forward. Before you do anything else, make sure you hit the red subscribe button and the bell icon so that you will be notified when these videos come out. Last but absolutely not least, make sure you follow our account on Twitter at iGlobalGold, because some weeks I do not have a chance to post a video here on YouTube, but I usually have a chance to post a few quick snippets on Twitter even in those off weeks. So make sure you follow iGlobalGold on Twitter. Let's get into it. Briefly, make note of the legal disclaimer. War rumblings, Russia, Ukraine. What is the mainstream news talking about? It's not that we need to read the mainstream news to necessarily believe everything they are saying. In fact, it's typically quite the contrary on a number of things. But I do believe that it's important that we follow the mainstream media to know what that general consensus opinion is going to be amongst the casual reader, the casual follower of the news. And so here we see this report that came out actually today. Now, it was just updated. This is Friday night. This report was updated just before this recording, Friday night Eastern time. However, this report did come out just shortly after 1:15 in the afternoon today, p.m. Eastern time. Discussion of the U.S., here in the U.S., saying that Russia could invade the Ukraine at any time. So there's satellite imagery. And by the way, this is, you see this up above. This type of satellite imagery is what I worked on when I was in both the NGA and the CIA back in my former career before I decided to leave the war machine because I was no longer aligned with those principles of wanting to conduct perpetual war, and I wanted instead to align with freedom and growth and love. So I had to leave that war, and so I have a, somewhat of a special insight here onto how these types of images are used. Obviously, I cannot reveal anything that is classified. However, this is a typical kind of image that we would study when we were following the action in Afghanistan and Iraq going back a few years ago. Satellite imagery shown here of Russian forces amassing on three sides of the Ukraine border. Biden talking about that the U.S. at this point will not send troops to Ukraine, but we're sending 3,000 troops to Poland. So there are certainly rumors of wars that are circulating right now. What we want to do is talk about, if this invasion were to happen, let's say over the weekend or perhaps on Sunday, perhaps into Monday on Asia, which would be the Sunday night open in the markets here in the United States, how might this look? Let's take a look at the short-term price action. This is the one-day chart for 10 different asset classes that we should follow. Here's where that invasion report came out shortly after 1:15 p.m. Eastern time, and just look at what the response was of the markets. Now, it's almost like this had already been leaked earlier on today, because you could see the gold miners, the silver miners were already strong on the day. Gold was already up somewhat. Silver was up somewhat. The commodities were up somewhat. But then when this report came out, notice it just added more fuel to the furnace here for the gold and silver miners, for the oil market, for the gold market, the silver market. Commodities were higher. Bonds were a bit higher and a push to safety. The U.S. dollar was sort of marginal for the week. Notice stocks selling off, and notice how there's a divergence here between industrial commodities and industrial stocks. That is very, very good to see from the standpoint of a precious metals investor, and especially how silver could buck itself from the S&P 500. As we know, when stocks are crashing, it's quite typical that silver follows stocks lower, but this was a nice divergence to see. Perhaps silver is ready to follow gold. And then last but not least, I want to bring to your attention here, look, if you're in cryptocurrencies and you're saying that the cryptos are going to save you from, deflation or the fear, that could be escalating, imagine if this invasion actually happens. I mean, you do see some evidence here that Bitcoin at least is not serving as the safe haven over the short run. So perhaps if you've been 100% in Bitcoin, there is something to be said for taking the time now before things get any worse and constructing your alternative life vest. It doesn't have to be all or nothing. You don't have to sell 100% of your Bitcoin and go into the silver and gold miners or the physical metals, but perhaps some. There's a big difference between nothing and simply some. I'm going to leave it at that. Short-term price action, extremely encouraging for precious metals investors to see here, based on the mainstream media reports. Where does it leave us with gold? It's been about a month here since the last video. This is a key data point in the making. This looks like a key breakout that is about to happen. We will talk about what the pathway forward should be if this breakout is going to hold in just a moment. However, before we get there, I want to caution you as precious metals investors. We need to be a little bit careful here about what we are going to think about the price action here in gold and silver over the very short run. Because gold has a tendency to spike like this on geopolitical type of events, yet then to not always be able to sustain those gains over the short run. Yet when we look over the long run, we can often see that 2 steps forward, 2 steps back, and then stabilizing again often serves as a bigger picture bottoming process. So let's look at the quintessential example of this so you can see what I'm talking about. Let's just go back to what could arguably be called the most important geopolitical event of the last half century, the attacks on the World Trade Centers in New York, September 11th, 2001, the geopolitical price spike that we saw on September 11th was right here. You can see it on the chart. This was what? A 7% spike in the price of gold in one day. This would be equivalent to a $130 move in the price of gold using 2022 dollars. In other words, from, let's say, 1850, this would be a $130 move. So imagine if gold had moved, up to 1980 or so, just below $2,000 today. That would be like that equivalent back in 2001. So very dramatic kind of move. Now, but the bigger point here is to notice how if you missed just the 1 day move and then there was a little follow on, a little higher for the next couple of weeks, notice though that gold gave back all of that gain. That entire 7% gain was given back, and actually and then some more. So notice here that these lows in November and December 2001 were actually slightly below the entry point here on the price spike from the terrorist attacks. So if you had bought gold at any point over the following month thinking, wow, this could be the start of World War III, or, I remember, I I was in university at the time. I remember, the officials at the university handing out iodine tablets because we were only a few miles away from a nuclear power plant. And there was concern that nuclear power plants were going to be blown up. And, of course, everyone thought this was pretty close to the beginning of Armageddon. So if you then said, hey, it makes sense to buy some gold after that happened, you were sitting on a 7 or an 8% loss a month or two later, and you must have been kicking yourself, right? Or is that right? Perspective. So we zoom it out, and we were just looking at this. And here is that quote-unquote isolated geopolitical price spike, which over the short run was isolated and gave it all back and frustrated everyone and said, oh, why do we buy gold? We're underwater now on our investment. But notice that price spike was actually part of a much larger 5-year rounded cupping base, a basing pattern here. Notice a series of downtrend breaks, and notice that there was actually a downtrend break that happened 5 or 6 months prior to the September 11th event. So it's almost like the market was saying, hey, ahead of time, there's reason to start buying in here, which is why we pay attention to the downtrend breaks. Wait until we get back to the current price chart. I'll say it one more time. We pay attention to downtrend breaks. They are critical technical signatures. A larger bottoming process was underway here, which was inclusive of that whole gain and retracement. Let's zoom it out one level further. Aha. And we were just looking at this. And so here's that quote-unquote isolated geopolitical price spike in the gold market. You can barely make it out. However, if you were short-term oriented and you were buying in 1997 or 98, and basically the market was moving sideways for 5 years, and you're saying, well, even with September 11th, we still haven't broken out, right? You're still not higher than we were back in 98. So I imagine a lot of people would have been giving up on gold here. Was that the right move? We have history to use to our advantage to study these kinds of things. Again, I challenge you to imagine yourself here having bought right after the geopolitical price spike of September 11th and then being sitting on losses for several months, or imagine if you had bought several years prior, what you'd be thinking that entire time, okay? Perspective is key. The rest is history. Here we are. Now, bull market developing. The wars in Afghanistan and Iraq were highly inflationary over the following 10 to 20 years, which accounts for a significant amount of the monetary debasement that occurred to pay for those unsustainable wars. Of course, all the other programs going on in 2008, the bailouts of the banks and Lehman Brothers and Bear Stearns and JP Morgan and all the rest contributing to it, including now the latest incarnation of that being the quantitative easing that happened after the coronavirus panic of early 2020. And that easing has not abated, even though the Fed is rumbling that they're going to start tapering the balance sheet. They have not done that yet. Brings us to the present. What did we just talk about in the last slide? Downtrend breaks. Boom. There we are seeing it. We have been waiting for this one for the last year and a half. It is extremely important to juxtapose the current price action. By the way, if it looks like there's a lot of lines on here, please pause the video. Make sure to note what all the colors mean, because these mean something. There is no data on this chart that has no meaning to it. Everything is labeled for a reason. Downtrend break, 18 months of declining prices, has been broken today. Now, we do want to see, we got the weekly close today. It was on a Friday. We want to see at least one more weekly close, if not two, above the 1855 level. 1855 will solidify this downtrend break over the next 2 weeks. It's important that we see that. Every once in a while, the market can give you a little false breakout. Especially, for example, let's imagine, Putin and Biden come out on Sunday night, sit down at a table, with no masks on, shake hands, say we all love each other. There's not going to be any more war. I would think that gold would give back this breakout if something like that were to happen. Probably not going to happen, though. And the market is speaking. Market is speaking a language all of its own. What we are looking at here is akin to a map. We just looked at that satellite image in the very beginning, the top-down view of Ukraine and the border there, troops amassing in Poland, Russian troops amassing on the border of Ukraine. We looked at the satellite map of that. All we are doing here is looking at a map of the gold market. Same thing, different set of human behaviors that we are mapping out. We have just broken the downtrend going back almost since the peak. Not every downtrend starts exactly at the former all-time peak. In this case, it started just 1 month later, and that's where we truly see the sellers emerging every 3 to 4 months for the last year and a half. What is going to happen now? Assuming we hold above 1855, gold will be moving its way over the next 1 to 2 weeks to the next resistance zone, which will come in here right smack below the 1920. 1920 was the former peak back from 2011. It's why there is a psychological significance to this peak. So we have it labeled in black here, horizontal resistance. Gold should be hitting 1920, and what was the lesson from September 11th? Backing off. Frustrating everyone on a highest probability basis who buys gold here over the next week or two for insurance, as they will probably be underwater on their purchases about 3 or 4 weeks from now. That takes us into the mid-March Federal Reserve interest rate hike. The first interest rate hike of the last 3 years, okay? Very important second data point coming up in March. That is where we think gold will find its second significant bottom and should then begin to form, as we saw after the September 11th, a new trend emerging higher. The next logical data point after the Fed interest rate hike is going to be right up here at 1960, representing these peaks going back from 2020. Very clear to see swing peaks here around 1960, 1965. Gold should then back off from there once again. This is not yet the time for gold to move straight higher. We are not anywhere near people lining up around coin shops, gold bullion dealerships being sold out, CNBC having a special on silver miners. We're nowhere near that. That's brewing for sometime later this decade. Let's focus on the present situation right now. Gold backs off again from 1960. Bases out here through the middle part of the year. And some sort of a trigger is setting up somewhere around the third quarter of this year to finally have gold break its former all-time high at 2,074. Don't ask me right now what it is, but this is the message of the charts. This is the very early warning sign when you have a market that is approaching an all-time high, has finally broken the last visible downtrend that marked the correction from that all-time high. It's telling you another surge is getting ready to brew here. Could the final breakout be, let's say a sustained war between Russia and Ukraine, perhaps dragging in some of the NATO partners? God help us if that's going to happen. I certainly hope not. That's not why I want gold to go higher. That's not going to be a very nice world to live in for most people. Could it be a Federal Reserve reversing interest rate policy here as we get into the later part of this year, perhaps due to a stock market crash? More likely, and a better world to live in, although a tough world for the savers who are going to continue to be punished by 7, 8, 9, 10% debasement of their savings year in and year out as long as you continue to hold fiat dollars. Something like that is setting up for later this year. We can't tell what it is at this moment, but the charts are giving their first hint right now. So if you are paying attention to this right now, this is the time to be finalizing your precious metals portfolios for this round of the drama that we are all living through. Not when we are already breaking out here, which is coming. This is what happened to so many people last year. They chased this vertical move higher, and then they paid the price for the last year and a half. Do not repeat the mistakes of the past. No one is perfect. You will learn from your mistakes if you endeavor to simply incorporate that into your plan going forward. That is what we all do as human beings. We learn from the past and we make improvements going forward. Finalize your precious metals holdings that you intend to be serving as your life raft here. Finalize those in this window here of the breakout and the retest on that highest probability basis. If you would like help and if you would like to learn about the highest form of leverage that you can get in the precious metals sector, I want to tell you about different ways that you can consider investing in this sector. We have two services. One is called Precious Metals Intelligence. This contains weekly videos, exactly like you're seeing right now, but longer and more in depth. We cover not only gold and silver, but the US dollar, the US stock market, the rest of the commodity sector every single week. This includes the exact open market gold and silver miners that we are investing in. You just saw today how the gold and silver miners were the best performing sector on the face of the planet on a day like today. What if a day like today is not an isolated event, but it's the beginning of a new trend? That's what the gold chart is suggesting. Those gold and silver miners are going to be the best performing asset class, we believe, for years running, based on how oversold they are right now. This is called Precious Metals Intelligence. If you are a higher net worth investor and you would like to try to attain the highest leverage reasonably possible in this sector, you should make note of our service called Elite Private Placements. Why is this a higher leverage service with larger gains? Because when you invest in these same gold miners but do it by private placement, you receive free warrants with every investment that you make. And the free warrants get you nearly twice the amount of upside as the open market miners. Nearly twice for the same cost to you. Elite Private Placements also includes a free year subscription to Precious Metals Intelligence, so you'll not miss out on anything that we're discussing here in the weekly videos, but you will get access to these elite private placements. I encourage you guys to think about this. As I said, this is the time. We're in the window now. By my estimation, we have just rounded off of the worst sentiment in the precious metals sector in the last 7 years. Yet the charts have been looking good and better every single week. But more and more people will be becoming disinterested in this sector. We're seeing the initial evidence right now that gold is trying to break out. Whether it's successful right now, whether it's a month or two from now, you see the writing on the wall. Do not wait until gold is above $2,000 an ounce to be doing your research, making your buy decisions, and finalizing it. The time to do it is right now, depending on how much leverage you want to try to achieve. If you would like to work with me one-on-one, I just want to let you know I do individual consultations with people just like yourself. Whether you're just starting and this is all mumbo jumbo to you and you're like, where the hell do I start with this? Or if you have millions of dollars that you're looking to diversify in this sector, I work with individuals across the spectrum, just like you. I take no funds, no fees from any of the companies that we profile here, none of the dealerships, nothing. I work entirely on the basis of helping individuals such as yourself. As I said before, make sure you hit the red subscribe button. And I want to thank those people that are supporting this channel on Patreon. Make sure to follow us on Twitter because sometimes I don't have a chance to post these videos. I want you to stay healthy. I want you to be someone who prospers during this time. If you're a freedom lover, you deserve financial freedom, political freedom, medical freedom, and spiritual freedom, all in this period coming up. We want to achieve all of those simultaneously. We do not have to make sacrifices during this time. That's what we're doing here. That's what I want you to do. Welcome. Let's go.